All right, so I guess we can start with this. That's the receipt from the last challenge that I passed here with TopStep, 50K account. Profit target was 3,000, so 53K. Passed in 3 days. Just using this strategy, it's really quite simple, guys. Worst day PNL, best day PNL, 1,420. So let's get to the charts and let's look at the actual strategy. So the first part and the most important part is to find where the liquidity from the institutional players, the big boys as I like to call them, the banks, the hedge funds and all that stuff, where the liquidity is, the real liquidity, meaning the limit orders, the limit buy orders and sell orders, right? This is what we're interested in. We want to know where these whales, right? We call them the whales, like the big boys. Where do they set their orders? So we can figure out at what price the orders are. Once we see that, we can see if there's a strong reaction. And if we have a strong reaction, well, we hop on the trend, right? We want to follow, this is the big institution, right? These are the big banks and the big hedge funds, and we want to figure out what direction they're going, and we want to be one of these little fish right there, just hiding under them and just doing a little bit of they're going to go for kilometers, we're just going to go for a few 100 meters, right? We're just going to take a little scalp because we never know when they're going to reverse, turn around, and they might even eat us sometimes because, they're still sharks, This is a whale shark. So that's the plan, right? So how do we know where the liquidity is? Well, I can tell you right now, it's not fucking ICT. I said I wasn't going to use the F-bomb. It's not frickin' ICT and it's not frickin' SMC concepts, because if you want to know where the smart money is, meaning these big limit orders, well, look no further. It's on Bookmap, right? This is free, by the way, because you have to pay for Bookmap, but you have some guys like this, OTL Signals here. He actually shares his screen like all day long for free, okay? And this is scary, I know, if you haven't seen this before, but don't worry, because you don't have to look at 95% of this. All you have to look at is here. It's the cheat code, the COB, current order book. So you want to look at smart money, it's right here. Look at these orders here. 74 contracts at 33.40. The price is here. That's the price of gold currently. I only trade gold. So, the current price is 33.05. But at 33.40, there are 74 contracts waiting to be sold or filled to be sold, right? This is a huge order. Well, it's a big order, right? That's smart money. That's it. That's it. You know what smart money is. Forget the concepts. That's smart money. Fucking, it drives me crazy, all this SMC, ICT bullshit. Right here, you got it, okay? So now you know where the smart money's order is. Now you're gonna wait for a reaction from that. So let's do it step by step. So let's say you wake up in the morning or after work, you get in front of the charts, you open YouTube, like this guy's channel. There's other channels that share their screens, okay? For free. And you're gonna look, this is the important part, at the COB, current order book, and you're gonna write down on your chart, on TradingView, on whatever you're using, you're gonna write down boxes or lines with the amounts of contracts, but only the levels that have more than 50 contracts, okay? Because there is orders at every level, at every price, but some of them only have 34 contracts, 16 contracts, 25, right? We're only going to write down on our chart the ones that have more than 50. So 33.40, that goes on my chart. There's 74 contracts. I write that down. 33.25 has 63 contracts. I'm writing that down. You see here, there's 46 contracts. I'm ignoring it. 33.20 has another 63 contracts. Okay, writing that down. And here, right above where price is currently at 33.08, there's 66 contracts. I'm interested in that level, by the way. And now for the buys, right, below where price is in the green, these are the buy orders. At 32.95, there's 84 contracts. I'm gonna write that down on my chart, okay? Then there's 120 at 32.80, there's 150 at 32.65. These are huge orders. And there's 110 at 32.50, which is very interesting because even though price action is very bearish right now, we are starting to see some very big buy orders. Anyways, I'm not in any trade right now. So this, now going back to last week, this is what happened. We were in a strong downtrend, right? I was looking for a pullback, and more importantly, I was looking for an order to appear, a big order to appear on Bookmap. And that's what happened. We were going down, we started bouncing just before London Open, right at London Open actually at 2 p.m., this big sell order appeared. So price was down there at the time, right? And it was about to bounce. And already you had some big boys preparing some sell orders at this price at around 33, 45, 46, okay? So as soon as I saw that, I wrote it on my chart and I put an alert below the level on TradingView. And when price went and hit that, I stayed on the chart and waited for what? When do you enter? What's the confirmation candle? Very easy. It's an engulfing candle, in this case, a bearish engulfing candle, okay? That's what you're waiting for. So the low, the body low of this candle closes below the body of this candle, okay? It doesn't close below the wick, so you can argue that it's not a real bearish engulfing candle, but it looks great to me, and that's the way I do it, okay? That was a short, and but for the take profit, I'm not going to go into too much details. In this case, I put it below the low because it was a very strong downtrend, okay? Most of the time, I'll put it actually above the low. You see, it got a little bit risky here because it bounced, so that was a win. Here we had a loss. It was interesting because you had 94 contracts, which is a big order, right? And we filled that and pushed down. Again, the order appeared at 3 a.m. That was during New York. But when I woke up in the morning here during Asia, I saw that this order was just sitting there. So at 6:45 a.m., I was probably waking up looking at the charts around here. I saw this order. I was like, oh, that's interesting. I wrote it down. We had a huge bearish engulfing candle, right? So that was a great short. It turned out to be a loss, but the setup was perfect. So I had no regrets. Above that, we had another order which had been sitting all night as well, or during New York session. And they had 57 contracts waiting to be filled there. So I was interested in that level. We got our bearish engulfing candle. I took the short. That was a win. Okay? Pretty simple. Once you got your levels, all you're looking for is an engulfing candle. Bearish engulfing if you're looking for a short, bullish engulfing if you're looking for a long, goes without saying. So that was the last trade of the week for that challenge at least. This one is interesting because 7:30 a.m. So I'm looking at the charts and I see this order appear. And at the beginning, there was just 65 orders, 65 sell orders at the level of 33.55. And as we're going down, I'm waiting for price to go down and push back in, which it did. And as we're pushing back up, the big boys are adding orders now. They're liking this level even more. They're going from 65 to 95 orders. So that's nice to follow the evolution here because you're realizing now that the level just got a bit stronger and the big boys know what they're doing, right? We get our reaction from there and we get our win, okay? Where do you set your stop loss and TP? So as for the TP, again, that's discretionary. I'll just give you one advice is don't be greedy. Don't try to do this or whatever because you see the cool guys on YouTube do that. No, you're not cool, okay? If you want to be a trader, forget about being cool. Be a nerd. Be a loser nerd who's disciplined, who's not greedy, and forget about the Lambo for a minute, okay? So that's what I aspire to be. So here, the TP is going to be above the highs in this case. So here it is true that it was below the lows because we were in a very strong downtrend. Here, technically, we're still in a downtrend, right? That's why I'm taking shorts and not longs because of this. But, you know, this was looking a little bit bullish now. So I was taking shorts, but I was taking profits, you know, faster. I was not aiming at the lows anymore. And by the way, you can see that the idea was right because even though we were making higher highs here in this trend, we were still going back on that higher time frame trend. Okay, so I hope that makes sense. Okay, so the stop loss, this is the most important part because you can see, I'm sure you've noticed already that my stop is kind of low. It should be at the high, like most stop losses would be over here. And that's fair, and you can keep it that way. But actually, what I do is I will pull a Fibonacci level, a retracement, sorry, from the high to my entry, not to a low of a candle, from the high to my entry. If you don't know what a Fibonacci, you know how that works, you have to watch some other YouTube videos because I can't explain to you that like right now. It's fairly simple. But for those who, you know, most people know what that is if you've been trading for more than a month. From the high to, by the way, if you don't know what a Fibonacci level is, if you don't know what basic support resistance is, keep this video for later. Go figure that out on other videos and come back to this later because you need to start at the beginning. Okay, so this is the golden zone, right? The golden pocket, call it what you will. 65%, 61% of the move. Okay, so these are my settings, and I pull it from the high to my entry, and I put the stop loss right above it. Why do I do that? It's because after all of the back testing and the live trades that I took, I've noticed that when price goes down and start to mess around in my stop loss area and goes above this Fibonacci level, right? It's actually most of the time, like 90% of the time, it's going to actually take the highs, okay? So if you're going to take my stop loss up here, I'd rather have it below here. Every once in a while, very rarely, it's going to wick above the fib and then go back down to my TP, but that's fine. I'd rather have lower risk on all of my trades, and sometimes, you know, sometimes get stopped out and then it goes my way, that's fine. But at least most of the time, I'll be saving that amount of money, right? Because look at the ratio. The initial ratio is 1 to 2, you can see here 2, and then when I pull it down here, it becomes a 1 to 2.8, so almost 3. And the logic is the same with every trade. So this trade was a loss right here immediately, and instead of losing 55 ticks, I lost 37 ticks, right? So I'm saving money on these losses. Okay, so Fibonacci from the high to my entry, and there goes my stop, a little bit above it. Okay, last thing, what I like to do as well is I like to do my personal technical analysis, and I like to see if these smart money levels, these big boy levels of liquidity, if they go with my technical analysis, if they make sense to me. And here, for example, it makes sense. We had this wick, which was a strong support, right? We bounced, broke through and retested, on the other side. And so this support was now resistance, and boom, we had a reaction from there. You'll notice that these kind of weird wicks out of nowhere like this, when you pass through to the other side, they often become strong resistance or support if it's in the other way. What else? This trade right here, well, look at these wicks, these two wicks right here. This and this wick. So this was resistance, retest resistance. And so these orders were placed here probably because they were seeing that too. The big boys agreed that this was an area of resistance. And I was very happy to take that trade. Also, the reaction was great, but it was a loss. As for this one, well, this trade still goes kind of with this area. You can just move the box a little bit, but it's still the same area basically. And what you have and what I like to see, you can see that in my previous videos too, is the liquidity grabs. So if you're an ICT kind of guy, I think we have that in common, is I do agree that market tends to go and stop people out and then get back on trend. That makes quite a bit of sense to me because it's extra, you could call it liquidity, I guess, as well. You're just taking people's stop losses and then boom, it gives you extra fuel to move back in the other direction, right? So yeah, you take the stop losses, so that's a level, fill the sell orders, and then you go. So you see having some resistance and some, liquidity grab kind of a concept, well, that's pretty useful. It just gives me more confidence in my trade, and you can do that yourself. As for this trade, well, look here. Again, level of support resistance, right? We go up, we retest, this is support. We go up, we break, we never retested it yet, and boom, we retest exactly that wick here, okay? So you can do your own personal TA. It gives you extra confidence, and you can see, look at that box. If you extend it, it was support here as well. No need to go all the way, too far to the left. Just focus on what's right there on your chart. Yeah, that's it, guys. It's about the liquidity, the real liquidity pools, right? The real orders from the institutional fellas, okay? That's what you need to find. And once you have that, be patient and wait for that engulfing candle on the 15-minute time frame. This was like the 5-minute and the 1-minute, you're gonna get screwed because you're gonna have some reactions, but not real reactions, and you're gonna get stopped out all the time. The 30-minute is gonna give you the signal a little bit too late, I find. So the 15-minute is just the sweet spot for me. Last bit of advice is that me personally, I do not trade New York Open. I don't trade New York because it's too late and I don't want to be trading just before going to bed. I don't trade New York Open because it's a fucking shit show. I don't know if I'm swearing, is that going to screw with the algorithm? Never mind. It's a fucking shit show. New York Open is horrible. Like, it's a nightmare. They take the highs, the lows take the highs again. I mean, they're screwing over people like as much as they can, and finally they're gonna pick a move, but you never know when that is. So I stay away from, when I did trade New York, I would stay away from the first hour of New York for sure, if the first even 2 hours. But I do trade Asia. Asia is the most respectful, right? The most civilized price action. London starts fucking people over a little bit, and then New York is just, I was gonna use another word, which I'm not gonna use. So yes, and I trade gold because I think that gold moves most of the time in a way that is more predictable than NQ. I know NQ is very popular to trade. I used to trade it, but I mean, during New York, I don't even know how anyone trades NQ, unless you're a momentum trader and you just enter on a 1-minute candle for about 7 seconds, hoping that it keeps on going in a direction. I mean, I know that people are doing great on NQ. I absolutely don't want to talk shit, but I'm just saying, in my personal experience, untradeable for me, absolutely untradeable. And you can see on Bookmap on NQ, NASDAQ, is that the orders change all the time, and you have huge orders and then small orders. I mean, it's a nightmare. I really advise you to at least check out gold. First of all, you can have the free Bookmap on YouTube, as I've showed you. And the price action is way more, yeah, I call it civilized, like chill, respectful. I mean, it's screwing people over all the time, but not as much as NQ. I mean, let's just have a look, because I have a personal, this is pretty nice actually, to be fair. This is pretty nice price action. But I have, look, this is the move that happens all the time. So first of all, look at this, for example. They wick the lows, take the lows here, so you're like, oh, okay, back on trend. Nope, go wick them again, huge wicks, back up. Now, also the trademark move is this kind of, you can see it in different kind of direction, but it's like take the highs, trap some traders, take the lows, trap some traders, right? You can see that on, look here, up, down. Take the highs, take the lows, trap people, screw everyone over, take these wicks. It happens all the time, like several times a day, that kind of move. It's just too unpredictable for me. And the trends are not that clear. It's rangy, but kind of trending, but kind of rangy, but kind of trending. It just doesn't work for me. It just doesn't work for me. It's too weird. So yeah, if you're having trouble trading NQ or Bitcoin, I used to trade Bitcoin as well, got R-worded, I got screwed many times. It's for me, it's untradeable. Bitcoin, very difficult to trade unless you're doing swing trading, then it's pretty good. But if you're day trading, I would stick to gold rather than Bitcoin for sure, and rather than NQ also. Just yeah, too much fuckery, guys. Simple as that. You see, I'm interested in this level here, and look at that. There's a level. There's like a lot of contracts here, and look what this is. It's a previous wick, and you kind of have a level of resistance here, right? Because price was ranging here. Okay, I've done my little rant about ICT, SMC. I've ranted about NASDAQ and Bitcoin. I think we've done that, and hopefully I've given you some decent advice. I hope that you find this useful. If you do find this useful, dropping a like would be very, very appreciated, guys. It helps a lot with this the whole channel, as you can imagine. If you do have questions, leave the questions in the comments. I'm happy to answer them, and if I find that there's material there, I might even make a video to answer your question. Yeah, that's it. And if you want to trash talk me about the ICT SMC stuff, fair enough, fair play, no problem. I won't get into an argument though, I can't guarantee you that. Yeah, that's it, guys. Listen, stay safe. I hope you can do well. I hope you can backtest this. I hope you can find some value in this. I truly wish you the best in your own trading journey. Follow me if you want to have more of this kind of content. And also, I'm going to do I do live trading about 2 or 3 times a week. So come check that out. And also, I'm going to be opening a Telegram in the coming days, where I'm going to share my trades live. So if I'm not taking it on a live YouTube video, I'll be sharing it on Telegram. Okay, that's it for me today, guys. Stay safe, be disciplined, be patient, and hopefully you'll be doing great.